Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly Video for the 8th of November here in 2022. Let's get started with Disney, which just released earnings. Now, before we talk about the earnings, let's see what the expected move is for these options. Right now, or at least before the earnings, Disney traded just shy of the 100 per share level. Good round number reference, but it had an expected move on earnings right over here of a 113% implied volatility, roughly $8.14 on the up or the down. Numbers came out. Let's see what the stock is doing. Right down there, $8 and a little change included. So Disney shares are meeting the earnings-based expected move on the downside. And that'll take the price. Again, you'll know a little more because the video will be out just after the close. And you may be viewing it later tonight or potentially on Wednesday morning. So you'll know a little more about what the price is doing pre-market for the shares. But at the moment, Disney share prices are trading back down to almost new 52-week lows to continue the downtrend in motion. So that's one of the biggest stocks reporting earnings. DuPont de Nemours. DuPont did earnings before the bell. And that stock is up about 7% in today's session. It actually was, on the upside, the leader in the S&P 100. That's DuPont. Right behind it was Amgen, which continued to push up into new 52-week highs just after its earnings. And it has a 300 per share place, or almost print, in today's session. Starting with that, let's go right back to the S&P. And let's actually look at the SPX and talk about some volatility, because two things are coming up this week. Number one, it's the elections, and that'll take place tonight. It's the midterm. Number two, we'll call that, it's Tuesday, but let's talk about Wednesday morning. We'll hopefully know the results of the midterm, Senate, House, and all across the board. But if we don't, that'll be some volatility going into the session. We will know CPI. So CPI data will be another potential big mover of the market. And let's see where that is taking place. CPI data right there. And that'll take place on Thursday. So if you're looking at the implied volatility, we see that just in terms of the SPX, 41% for that election aftermath, and the day after, I should say, $92 up and down in the SPX index, but we have the CPI right behind it. And that'll be another cause for volatility. We may need to update those numbers, of course, at the end of Wednesday's session. So back to the CPI information. And that'll come out pre-market. Key is going to be, are we above expectations? Are we beneath expectations? Or are we in line? The previous year-over-year inflation data was about 8.2%. The Fed would like that down to roughly the 2% level. That's why they are on a campaign to raise those interest rates. Now, this will be quoted in year over year, but also month over month. We'll be looking at this on Thursday. Not there yet. But in the grand scheme of things, we still see the market downtrending. That 3900 is a key resistance level. Today's session brought us back just to that 3850, almost 3860 level, and potentially back down. In the bond market, we had a recovery. Let's take a look at the ZN. ZN is our 10-year Treasury note bond, Treasury note. So that is going to be down to these continued lows on this ongoing downtrend, and in large part because of the inflation data and the rise in interest rates across the board. Now, the Fed does not control the 10-year Treasury note yield, but they do control the overnight Fed funds rate. And that's been increasing. They've been increasing that at a clip of 75 basis points at the most recent meeting. And that has sent Treasury yields across the board much, much, much higher. Just to compare, at the beginning of the year, in 2022, the yield was roughly 1.5%, quickly went to 2% in February, hit the 3% bound, 30 means 3% on the TNX. That happened in April, and hit that 4% bound in September into October. So we are above that into the 4.3, 4.2, almost 4.5. And that'll be true in the Treasury bond, 30-year bond, and of course any tradable ETF, which would include TLT, completing a bear flag back to the low, or the IEF, also continuing the downtrend. Behind that, of course, is the US dollar. And these are big picture concepts we're watching in the grand plan. And that is under the 110 level, which is breaking support. We'll be watching that extremely closely going forward, as that uptrend line was initially broken in the August area and then resumed shortly after that. So that's something to keep our eye on throughout the remainder of the week with the election data and with the CPI and any other surprises from earnings or companies that are in focus, which includes the big tech names. Oil took a 3% tumble in today's session. And that was, from my perspective, trading down away from the overbought or the overextended above the value area extreme. And that's about the 93, 94 level. The most recent play or trades or movement has been a decline from 93, 94 toward that 88 or so midpoint target. The other thing to note, as oil has traded lower in today's and the yesterday's session, is that gold has a bid under it, and a big bid. So let's see that on the bigger picture. Short term, that's been 2 trend days or 2 big reversal days, almost straight up. Going back to the big picture in gold, let's actually start with the weekly chart here. And we see that it itself is in a longer term, since 2020, trading range where support has been roughly the 1700 per ounce level, a little bit beneath that, and the resistance or the upper bound has been about 2000. And the gold market traded slightly under that and has come back roaring with a vengeance back inside, called this the volatility box, or a really big rectangle between 1700 and 2000. Same logic would be roughly the case in silver, although it may have a little bit bigger volatility box or rectangle. We'll count these levels as about 1850 per ounce to about 29. That's a wide box, but nonetheless where the silver market has traded down to a little bit under it, and then of course rallied back inside. That'll be the daily chart, going back a little farther to see that on the weekly perspective. It just is a mean reversion. That just means if the average is a little bit higher, 24 or so, that does allow for some short-term bullish positions or bull spreads to return, or for the price to return back a little bit higher. That will be true in silver, SLV, which is an ETF, and of course the other, which would be GLD. Now these are ETFs, not futures contracts, so there will be other opportunities with spreads or leverage or other trades into in-out spreads, risk twist spreads, any other position that you might be comfortable with or familiar with as an option trader. That's gold, silver, and a few other commodities in play. Just a quick scan of which stocks made new 52-week lows. 2 of them jump out at me: Tesla and Edward Life Sciences. Why do they jump out? Tesla has grown to a large market cap stock. It is a technology stock, or we can think of a retail, but we think of Tesla mainly as technology, but it sells cars, therefore it is retail. Retail goes in the consumer discretionary XLY. That aside, Tesla is continuing to make new lows, and as a technology or broader company, that's held its own alongside with Apple, which has not really seen the deterioration or continued downtrend as a competitor such as Amazon, this is a weekly chart, maybe Meta, which is Facebook, Netflix, which has declined about 70% with that 700 down to 150. Now it's recovered to 300. Lots of volatility in Netflix. And of course, other tech stocks such as Intel, which has almost been a straight down maneuver, not as high price stock, but it's gone from 65 down to 25. Tesla, until recently, has held its own and showed relative strength until recently. Now it is showing up as a list of stocks making new 52-week lows. Again, not surprising that Meta is continuing to be on that list, as well with Edward Life Sciences, which is its own downtrend playing lower. And of course, other companies on that would include these, sorted by market cap. Were there any stocks that made new 52-week highs? Let's take a look. Let's detach, get a scan in, and just go this way to the new 52-week highs. Public 52-week highs or new yearly highs. I want to scan in the S&P 500, and we'll see what those are. A few of them are. And there are some of the names that we've seen as well. So the concept is that which is strong gets stronger, that which is weak gets weaker. Topping the list, it's been there for a little while, ExxonMobil, Eli Lilly, Merck, McDonald's joins the list, Amgen, Lockheed, Gilead, and Cigna. And let's look at their charts as we end the video. ExxonMobil, a weekly perspective, a chart perspective, a daily perspective, new highs. Each arrow represents new 52-week highs, and that stock is on the buy list. Eli Lilly, similar logic, making a new 52-week high, even in the context of a bear market. Merck, MRK. McDonald's has joined the list. It broke out from a trading range. Amgen, we saw it on earnings. Lockheed Martin broke out as well from a trading range, just like Amgen. And we'll look at Gilead Life Sciences, broke its trading range, and we'll finish up with Cigna. Cigna continues to be a strong stock, getting stronger. So there are trades and plays and leadership laggards in the stock world and the ETF world. But we'll be watching the midterm election, the CPI data, and of course where that leads us in the S&P, NASDAQ, broader market, broader index, bond market, crude, and other commodities. As always, be careful and safe. This is Corey Rosalind with tonight's Theo video update for November 8th, 2022.